Good evening, fellow students. Welcome back to review again. And thank you very much for choosing me to mentor you, and I hope I keep adding value to your studies. I hope this vid is not something that you're going to pay. This is continual education, so I'm sending it to all the students. And once you find value, you have any questions, you come and ask me. It's just a continuation of price action here. And I'm going to combine both the setup on TradingView and the chart here, MT4. So if you don't find any or you find any difficulty in using, because most of the things on the TradingView we don't have those settings on the MT4. Once you don't like using the TradingView, it's free. So if you would like to use a TradingView, kindly go there and then subscribe. Is free, so you can do analysis there and post on your chart, or you can do analysis on your chart and paste on your TradingView. So today we're just going to talk about price action, and I'm going to talk about an indicator which can also help you in determining your stop loss and your profit targets. Then I'm going to talk about the EMA already, so there is one that you can also use, which is the 20 EMA, linear moving average. So I'll show you, and if you need me to do the setup for you, just let me know, call me, and I'll be more than glad to come onto your computer and do your setup. So we're going to talk about trending market. This is going to be price action, but you know already. And hi, we are trading. I'm trading, so I'll be doing both our live trading, and then I'll be talking about things. So we talk about the trend line already. You know about setups for sell and buy, and this is a very good setup for you, which you can see, which is a sell trade. So you can see it very much, which is a sell, and you take the sell trade, and you know where your stop loss is. This is the setup here for price action, and this is a crossover setup initial here. So when you go there, you are good, and your price action is the previous key level. Your first take profit is the 200 EMA, or this low, which you have already hit it, smash it. If the sell pressure is strong, then expect price to come to the next key level. So we've talked about all this already. So right now, what we're going to talk about, which I'm going to let you do, is we are talking about a trending market. Okay, we are going to talk about a trending market. 600 profit, 700 now, as you can see. So I picked those trade based on the reversal from here. Okay, I picked the trade based on the reversal from here, because I know the trade is going to reverse, and you can see I'm doing 60 lots. So I've closed that trade now. This is a challenge account, so yes, I've closed that trade. So when I have another entry, I'm going to do it. But why are we here? So we talk about trending markets. We're going to talk about how you take your stop loss. We're going to do the price action, and then so let's move, and let me put the chart on something I want to show you how I do the entries and how you can do the same entries. Okay, so what is an uptrend? So we're going to do an uptrend, and I'm going to show you the downtrend and everything. So I talked to you about an uptrend. So an uptrend is when you see the market forming, you see this is a higher, then the same market forming higher lows. Okay, so this is higher lows. Okay, then it forms higher again, then you have a low. Okay, then you have higher again. Okay, then you have a low, then you have high again. Okay, so that is an uptrend. So, and you have a higher the lows again. Okay, so, and what is a downtrend? A downtrend will be the opposite of this uptrend. So a downtrend will be when the market is forming, oh sorry, so this is higher lows, this is a downtrend, then you have high, then you have the low. So this shows a downtrend, so you wait for another high, you wait for another high. Maybe this chart is not clear, so I'll do it again. So the first one, there was a mistake there. You are talking about lower highs. So a downtrend from your daily charts is when you have the higher low. Okay, then you form another higher and you form another low, then you form another high. Okay, so we don't have, but this is what is going to happen next. And the reason is this high, okay, when you form higher lows, the next high that you form, as you can see, let me put the trend line there, and probably let me make it red so that you can see. Let me change and make it red, something that will be visible, that you can see. Yes, so the high is not higher than the previous high, then you form a low, then the high, then you form a low again. So this high that you are forming should not be higher than this high because it's a downtrend. So you have a lower highs, higher lows, higher low. And when you have an uptrend market, you form a lower high, lower high, lower high. So you see an uptrend, the first low and the second high. The second low is not lower than the previous one, then but the higher will be higher than the first one. So you have the higher lows here. Let me put in the text for you to see. Insert a text. So you have higher, okay, you have higher lows in an up, lower highs in an uptrend, lower highs. So yeah, so that is it. You have a lower, which is the L, and you have a low, okay, so let me put a low there, then you have the highs, okay, which is represented by H. So you have a low, high, then you're going to have another lower, you have a high, then you have another low, a high, then another low, then the high. And when the trend ends, you see that the last high, this is why price action is very, very important, and it's good for you to understand market structure, because the last high, okay, the last candle of the last high, when the trend ended, what you have to know is those candles will be the same candle, okay, like as you see here, almost equal. So if you put your trend line there, you can see, okay. And when it's in a downtrend and forming that lower high, the reversal tells you those are the key areas, the demand areas where you have consolidation. We've talked about this already, so if you don't actually understand this, you should go and look at your the previous videos, okay. So these are consolidation areas, lower high. So this is where the key areas, which is the demand zone and the supply zone, those are the areas that you have to understand and mark them, okay. You mark them, okay. So these are the key areas that you mark them, and this is where, if you are looking for a buy trend, you are going to take your trade. So what I would like to do here, if I want to go for a buy, just using this market, I'll talk about the structure. So this is where the structure forms, okay. Consolidation area, the structure is formed here, structure is formed here, structure is formed here. All those key areas, double bottoms, double top, or triple bottoms, double tops, those forms your structure. So what you want to see when you want to do a buy trade here is you want to enter the market, okay. When you see this reversal, you see it started from here. So what you want to do is the market comes down here on this candle, this forms the low, you put your trend line there, it goes up, consolidates here for 3 days, and it pulls back. This is the pullback forming this double bottom. The good entry is you want the market to go back, retest this level again. You can be in for a short, but this is a low, okay. So I wouldn't want to take, if you want to take, yeah, it's still valid, you can take a short here on the daily chart. That is a good trade, but I'm just talking and close your trade here. But I want to look for buy. So the proper buy I want to take is, this is the first low, okay. It retests and forms the double bottom. I want the market to go here. You can see all this consolidation here, and the rejection came. Once this rejection comes here and forms this pin bar, you see it couldn't break and close below here. I want to see my bullish candle, which is here on this day. So on the next day here, I'm going to have my entry here, okay, and I'm going to have my stop loss below this low here. So probably I'm going to put my stop loss here, and my target is going to be on a key area. So assuming you don't know this area, how do you know that this key area? If you go back to historical charts, you know, on the weekly or on the 4-hour, you see those key areas and you put it there. But this is where this indicator that I've been testing works, the ATR, average true range. So let me put the average true range there, because I've already set it up here, okay. So didn't I set it up, or here, where did I set it up? The average true range, oh okay, so I set it up here. All right, no problem. I'm going to set it up on the here as well, so that you have it on there, because the average true range, okay, takes the average of the last 14 candles, then divided by 14. So that tells you the average true range of the, and each candle here represents one range. So now let me come here and I'm going to save it so that I don't have to do it again. Okay, great. So now that I have saved it, so this is where we talk about those key areas. We talk about the key areas, and I've walked you through. And those who need me again, please don't hesitate. We just need to schedule a call. So this is the rejection area, and this is here. So when you come here, the average true range is for 0.014. So if you add one daily candle to it, you can know. So this is, it will give you the stop loss, and you always target about 2-3 because risk reward. So this is where trading view is handy. Okay, so we were talking about let me see, got it. We were looking at Euro Aussie. So let me look for yeah. So this is Euro Aussie here. This is where we were talking about. Yeah. So the average true range is here already. So when you want to go for a buy, you see, I love this area. So you see, it gives you that long position there too there. So this is where we talk about, and this was our entry for our buy. So you can see automatically it's showing you also the stop loss. So our entry was somewhere here. Okay, so we have our take profit, which I'm going to set it, okay, to this level. This is the previous, and this is the stop loss which I'm going to set. Okay, so the stop loss is here as we spoke. So it will give you just put this and you drag it there. So, but we said we want it to be a little bit below here, and the reason is of the average true range is that I will add 1 bar to this. So if the average true range, let me see the this indicator again. No, you add, okay, so you add 1% of the average true, 1 bar of the average true range. So when you add that 1% of the average true range, the reason is you want to give the market way or room to breathe. And then so you can see when the market starts taking off, you smash your take profit, which is here, but even the price is gone higher. Okay, so this is where as we've talked before, I will look for indicate. I'll put EMA. Okay, I don't need the exponential. Normally the EMA that I would like to use is let me come here. The EMA that I would like to use, if I want to use any, you can use the 20, okay, or you can put the 30, the one that I've shown you already. So let me come here and let me put the 20, which I said is also valid, but I would rather probably use the 50 or the 30 also, which is also valid. And I don't want the exponential, I want to use the linear. Okay, so if you have this here, you have right entry here, you have your stop loss. Okay, you have your stop loss, and then you have your take profit, which it's smashed. But when you have the EMA, you see, we talk about it, when price is above the EMA, that is looking for a buy trades alone. It shows an up trade confirmation. Or if you want to look at the big picture, you can put the 200 EMA also to guide you in your trade, which you saw, which I was doing before. I'll show you example Okay, so, and then let me use a bright color so that we can see. Okay, so you can see once you got your entry based on price action here, you have price also above the 200 EMA. This is where your price action came, so it hits on your, you are taking out on your take profit. But on this consolidation area, you can see every time it bounces out, it goes. And you can see, I will explain this candle. The opposite is also true for a sell trade. Once you see this candle also, after all this consolidation, after your profit hits, because these are pullbacks, okay, pullbacks, then you can call the pullbacks, this is the pullbacks, then to form in the neck or the head, shoulders also we'll talk about that. You can go in again on a buy here, and your stop loss is here, because this is giving you the big picture that this is a bullish candle. And you can see this candle, some of them will say it's 38.6 candle, or the meaning or what it means. I call it a bullish wick, because this is the stop hands that they used to take people out, the market maker. So all this means is that when you see this, and this, that is a bullish candle. Once the where the market, because the market dropped all the way here, and buyers came into the market and they push it up all the way back up here. So once you see this, this is showing you that it's an uptrend. So if you go in this trade, you want your stop loss to be a little bit here, and your profit will based on the next key area, which in this case it would have been here. Assuming this is not there, you always look to your left, so you change it to a shorter, you put your, you mark your entry. So if I should delete here, okay, if I should delete this, let me delete this so that I'll show you. Or if I leave this, and I leave this area, because, and I tell you that so let me delete that, let me delete this area for you. So let me delete this. This is the take profit which I've hit before on the first hour chart. Then let me use this to indicate our entry, second entry, sorry, shapes, yeah. So this is the entry here, okay. I want to change it to the smaller time frame so that I'll show you where we can normally determine a take profit. If we cannot, because you need those data, okay, yeah. So you can see that is the entry when you come to the weekly chart. The second entry is here, you can see it, yeah. So that is the second entry here, as we spoke about. Then this was the profit target. This is what I wanted to show you. So these key areas, when you look on your left, you find it there. So once you have your entry here and your stop loss here, that key area will be your take profit. Let me put it there so that you can find it on the daily chart, because before you enter this trade you don't have this key area, but to measure that, that is over here. So when you draw that trend line, that will give you the key area, and your stop loss is about 171, and then your take profit is about 400. So this is about 1 to 2.5 or 1 to 3 risk reward, which is a good trade. So as you can see, that is it here on your daily chart. So this is your entry, and this is your take profit. It's as simple as that. And your downtrend also, as we talk about, this is the high, lower highs, you know how to enter already. Once this trade reaches this level on this green candle, I'm going to put my trend line there. Once the second day come, because I've already seen this big candle that this trend is ending, so once this day comes here and this candle closes below that, okay, what I'm looking for, naturally I will want to see a retest of this area. So if I have a retest of this area again, I always tell you about my 3 to 4 candles or 5 candles, and it doesn't break, that will be where normally you enter your sell position, and your stop loss will be a little bit above this here, or you measure, you look at the ATR and you add 1%, which is 1 bar, so you add it in pips and you calculate and you put that stop loss there. But because these few days price didn't even come there, so you now look at this area. What you wanted to see is what you've seen, a breaking of the structure. This is the key area, demand zone, okay, a breaking of the structure here. You want the market to come, as you see these days, test it here. So if you want to go for a short here, remember this is also a key area. So once price didn't break, if you want, you can go in for a buy here with a very tight stop loss somewhere here and go. But I'm not talking about buy trade. This is a pullback, okay, because this is a higher now lows, so it's going to form a high. Yes, there is nothing wrong if you want to take this buy, but what I want to, we've taken a buy trade, we are now focusing on a sell trade. So all I'm saying is, once this is happening, I want the structure of this to be broken, which is broken now. Test the key area, rejection, come back to this key area. Okay, initially the price went above it and closed inside it. Then the price closed above it again, and then the next day it closed below it. So this is another rejection. Then you can see a rejection, 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 4, 5 to 6 candles. So on this day here, now this is confirmation that I was needing, so I can go for my trade here, and then I can put my stop loss either here, or if I add an ATR, 1 ATR to it, my stop loss then is going to be here. Okay, is going to be here. Then my take profit, the first key level is here, the second key level is here, but I'm not doing 1 to 1. I want about 1 to 3. So this is where I'll put my take profit, which is on this key level here. And as you can see, the price straight down, so you've got about 700 pips risking about 133 to 200 pips. So that is about 1 to 4 risk reward. So this is how you take your sell trade, and you can see the same thing here on the Euro New Zealand. So this the other, or the candle that I was talking about, which they said the 33 candle, you can see on a bullish market also it can be yellow, can be red, and on a bearish candle also. Let me look for confirmation of a green one on the bearish candle, on the bearish trade. So as you can see here, look at here, on this very candle, you have those key levels here, you have those key levels here. So you can see you had an uptrend here because it was forming lower highs. Then on its here, the trend ended. Then you have this key level here broken, it couldn't even come. And how you use this EMA also to trade is the price close inside it here. So on this day here, this is another confirmation. So all you need is your multiple confirmation. You understand the market structure, you understand the key areas, the demand areas, how to trade reversals, and it's the same over and over on all the markets. So or here on this Euro New Zealand that you're watching here, this might be a good time to be preparing to be taking a buy reversal both on the Euro New Zealand on then the Euro or Z. When you come on the US 30 or so, the same trade I took, okay, I took this trade because of this key area here. So I knew that the reversal was going to come. So this is scalping, so quick in and out, and you saw it about 700 and I've gone. Okay, and this is if you choose on the 15 minutes the same, but the key area which I told you before, that when you are scalping you have to watch the daily chart and see what is happening. Okay, so we talk about those consolidations, you know, about the double tops, double bottoms, as you can see them. All I want you to do is go through your chart and identify them, identify the structure as it forms, and know when the structure is broken. The best trades is wait for the structure. Like here, this is the structure here, okay, because there is a lot of consolidation here. These are the key levels. So you have your shoulder here, as you can see, then you have your head, you have another shoulder. That is a confirmation of your sell trade. Another is you have the sell coming here. Okay, you have a structure broken here, you have another structure broken here, you have a retest of a key area here, then you have a lower high here, you have the structure come back, broke it again, you have a retest here and a rejection. So the rejection is here, so this is your entry, then your stop loss is here, and your TP is there. So the stop loss, you can have those tight stop loss, or you can use the bullish, you can use the ATR, okay, the average true range, which we talk about, +1, and that gives you that stop loss. That rejection is here. So all you need to do is practice, 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 and guys, you'll be amazed how your trading is going to keep improving and transforming. And now we want to talk about the bullish, the flags, and the other key analysis that you use using this kind of trend, okay, lines. Okay, so your key area is here, this is also a key area here. So the confirmation was that if price goes above that, then you are going uptrend. But if price breaks your trend line here, which is broken here on the downtrend, that is another confirmation for you, and that is your entry, and that is you going down. So this is just simple. I want to use the USD card. Where is it? USD card. I want to use the USD card to demonstrate more for you. USD card here. So this is the 1 hour chart here. Okay, so you can have those channels here, you can have also those channels here, okay, and you have your confirmation here, your key level rejection here, okay, so you have your buy confirmation here, stop loss is a little bit below here, and then it goes. So this is the rejection we talk about. It comes back, broke the structure, retest, then you take your trade off there. Okay, then you can see the channel that you've drawn. Price is not broken, because once price breaks and below this channel, I'm talking about this, that is a violation of your trend. So once this breaks it, this is here, the next profit target you are looking at now is here. Okay, because if you look to your left, this is the next key area. Okay, the next key zone is here. From here, the next key zone is there. From there, if you keep getting, this is a trade of a reversal, so that is where price is going. and you can see the EMA also there. Here now price has broken above it on the 4-hour. If you look at the 1-hour, you can see where it is, and you can see the channel there. So price bouncing off. So guys, this is all I do. Okay, this is all I do. And you can see them also on the crossovers. As you know, the crossovers, you can see the trades there, they are there on the crossover. So that is it here. You can see it very beautiful here. So I have my confirmation with, this is why I take reversal, so I don't wait for the crossovers. But if that's what you want and that's the only confirmation, you go. But I'm taking my trade here because I've seen this reversal here, and I know the market is not going to go again lower than here, because when it's coming down. So when I'm taking that trade from here, my stop loss is below here, because I want to give it a room, so in case there is a retest, it doesn't go. But structure is broken here, it goes and come and retest above the 200 EMA is telling me I have a retest here again, because this structure was broken. It went up, that is lower high, that is lower high. I'll call you back. Okay, I'm at a meeting. I'll call you back. I'll call you back, Ellis. Yeah, I'll call you back. I'm at a meeting. I'll call you back when I finish.
Okay. I don't job, so you only come later.
Okay, all right, okay. Bye. Yes. Sorry, there's one student calling me. So this is okay. The confirmation here for me, but it's a lower high. The structure is broken here. Okay, the structure is broken here. It comes back a retest. The 200 EMA is telling me prices are above it and it's bouncing off it, so I'm going to go. And you have your crossovers here already, and to know that this is fake out when using the crossover, look at this red candle here and look at this pin here. You can see when those two forms, you didn't see any cross to show that this should come down. So that is also a confirmation for you to take your trade. And you can see here you have a downtrend, right? When the downtrend came down, look at these pins. So this is where your price action becomes key. You see the structure was here, which was broken, and it came. Then you have the consolidation, and it's closing above the 200 EMA here. Price action tells me that this is a retrace to the upside down. So but because of this choppy market here, this choppy area here, because there is so much consolidation there, if you are inexperienced trader, you can avoid it. But look at something beautiful. So this is what I was telling you. You have your consolidation upside here, or this consolidation upside here, for you to give you a signal that the market, sellers wants to take control, is retracing. So if you go for a sell here as a day trader, you can put your stop loss a little bit here, above here. Then this is the sell. Then you have your crossover also telling you. How do you know your profit? This is the previous low here. Okay, so that came, and this is the previous low here. So that is the target, and you want to smash it. The only way the market is going to go lower than this is this structure here. There is a structure here. The market needs to break it, so price needs to come down and close below here. So when you come to the reason why I was telling you this buy and sell indicators, which you have at or you have you don't have them, so this is short. So this is the short trade, this is the entry. Okay, that is the stop. This was the take profit. Okay, so you measure it to the previous area and you bring it before because you didn't know this is going to come, and this was your stop loss as is set for you here. Okay, the stop, your entry was there, so your stop loss was a little bit above this, so you put it there. Or the ADR, you add one ADR to it, and ADR also can help you to take your profit. So if you add one ADR to it and you want to go for 1 to 1, then that. But if you want to go for 1 to 3, so you calculate 3. So if the stop loss is, let's say, 1.6%, your take profit should be at least 2 point something or 3 point something of more. But the low was here, so you draw your line there, you extend it there, and it comes. You don't have this feature on trading view. So look at something important that is happening here. Okay, this is coming down again, so I'm moving my chart onto the 15 minutes chart. If market should come down here again, because this is a structure and this structure fails to break, because I was talking to you, I didn't take this sell because this is a sell, because this is a retest again of a structure. Okay, breaks down, pull back up, structure is here, retest, failed to break, and also the EMA, because of the cross here. If price comes back and hit it here, I know it needs to come down again before it goes up. This is where day trading, you know all these tricks and you start making money. So if I wasn't doing the videos for you students and I was there, I will quickly enter this trade 60 a pip, and then there will be about 1,800 pounds or dollars, then I'm out. Okay, so this is how I scalp. I use this, all these things that I'm telling you to scalp. So all you need to do is go through the trades and then sell those and practice it and go. Another trade that maybe thing that I want to show you is what is it, even close above or close below candle when there is a structure here. Okay, how one way I used to, because all this is not they are key and they work based on the structure, because you are combining everything together to make the decision. Okay, when the structure is valid, another confirmation that I want to look for is, okay, if it is a buy, is I want like close above candle. You see, this is the market coming low here, structure rejection. This candle, this is how where it closed. So I want the next candle to close above the previous day candle close, which it closed. So on the next day I look for the buy there, and I want to check whether my market structure and everything is valid before I use this to confirm the buy. Then I take my trades and I go. And when the market also is on the downtrend, okay, when the market also is on the downtrend and I want to know that it's a downtrend, I want to check if my price or my structure and everything is valid. I want the previous close to be lower than, okay, so I want this close here to be lower than the previous close. Okay, so this close here, so the previous the next close, I'm expecting it to be bigger or than the previous close, which of course it did, and it confirmed for you here. You can see you have even a cross and it has closed inside your EMA. So when this close is bigger on the next day, I want my entry there and my stop loss. You can use the ATR, or you can do the ATR, as I told you, is the 14 closes, 14 continuous day closes divided by 14. Okay, so they take the average of 14 closes, they range, calculate the pips and divide it by 14, and that gets you the level. So each bar represent that. So this is what has been done, and this is how I sit here and I take my trade, and this can make you a full-time replace your full-time income or even make you more money than your full-time jobs. Okay, you can see you can make a mistake. When you make a mistake, you don't have to worry about making a mistake. Okay, on this challenge account, because I was doing something and I wasn't focusing, you can't lose more than 20,000 account. I was at 181,000, so only 1,000 to lose, to fail the challenge. And I sat up, became focused, and you can see I'm few money away. Probably by tomorrow, once this reversal trades, I'm going to analyze the chart and take this reversal trade and also trade tomorrow on the indices, and I should be able to finish it tomorrow. So if you look at the history, you can see even today I took about 5,000 loss this morning. Okay, and I've managed to turn a negative day into profit. Okay, I've managed to turn a negative day into profit. Yep, so you can see that is it. Stupid DAX, which I was scalping and wasn't. I shouldn't even have taken these trades because I finished in the morning my trades already. Okay, I finished my trades already in the morning, so I shouldn't have taken these two stupid trades. Okay, but it's not about panicking, it's about your mental strength. And you can see this is also euro and euro trades that have closed them today. So that was this is about, yeah, but and today I've made the trade. So you can go back and see all the trades I was making before, and making the mistakes because I wasn't focusing. As I'm in a mentorship, I was yeah, making money but also taking some bad trades because I was not spot on the analysis. So I made the money and I gave it to the back to the market, and I was taking some losses and I found myself down. You can see, yeah. So yes, losing is part of the trade, and this is honest as it is for you. Losing is part of the trade, but when you sit up and you are focused and you know how the market works, then always you are able to come back from a defeat. And I sit down and I'm so happy because when they're coming things, you're going to make so much money. The reason is because you know where, you see, we were talking about the US 30, and I'm going to show you. You know where the demand order is, you know where the supply zones are, you know where the demand zones are. So you just be taking your trades. You see what I told you, that if it's going to retrace. So when I took that sell, if I took that sell from here, I'm out again and I have another buy here. And how many? Okay, that's about 30. So another 1,008 again, or even more, because it's still going. And what I'm expecting is the market is coming to touch probably here. It needs to take out this and it needs to close above here before go. Let's look at the on the 5 minutes chart. You can see as it's coming. So if there is strong buy pressure, the next one is probably to touch here, retrace a little, and if the buy pressure continues to come, before it will go in here and touch this here, either close above it if there is more buy pressure or retraces. So it's the same thing. And if you trading, like I said, you want to scalp, look at the daily chart and determine the overall. If you have a double top here and you know that the market is above, is going to retrace, when you come to your smaller time frame, whichever is comfortable for you to short the market, you look for sell trades. And when you go, if it is a double bottom, you know that the market is above, reversing to an uptrend. So if you are scalping, when you come to your smaller time frame, you look for your buy trades. So you only take buy setup because the market is reversing. And always check the news. Okay, check your news settings. I sent you this website, so if you didn't know, this is better than Forest Factory. Okay, that is investing.com. So you have your calendar here. So this is today, the news that came today, as you can see, and that is it. And this is tomorrow. So always you check tomorrow what's going to come. And if you are somebody who trade news, so tomorrow, this is 1 a.m., you have a lot of big news coming. You have Euro, and then you have Aussie. So the Euro Aussie is going to react, and the Euro New Zealand, because you have New Zealand as well. You have pound, and if it is a high impact news, you can see during the day you have that. You have another Euro news, then you have some US dollar news around 1:30, that is UK time. You have Canadian news coming also. So if these are high impact news, it means that there's going to be a lot of volatility in the market, and that's going to be good for you. So this is okay, the challenge account here, and you can see the accounts going in. Let me reset it. As I told you, I was not paying a lot of attention because of the property this that I was doing. So you can see my win rate is not good, 63%, and lose rate is this. And you can see average winning trade is not good as compared to the average losing trade. But overall, I'm happy that I've been able to come down from almost losing to this. This shows if you know what you're doing, you can always do. So go to TradingView. It's free to set up. They have a premium service, but you don't need the premium service. It's because of this thing which can help you to easily calculate your stop loss here and just put it in and take profit. And you can add the average true range there. It can easily help you take your stop loss and profit, and that's it. And you can set it up, and you can save it as a template, so you don't need to keep setting it up. Whenever you don't find something you are looking for here, you just type it in, okay, and you see. So I'll leave you, and now encourage you to go read, learn, watch the video. If you have any questions you want to ask, just schedule a time and I will take you through and I'll explain everything against you. Thank you very much for choosing me, and thank you for helping me also to be your mentor. And I'm really proud that I'm helping you on your financial journey. As I told you, you can see the US 30 is here. What we were talking about, you can see I told you price is coming here and it's going there. You can see the buy by candle, because there is a lot of volume. And how do you know that there is a lot of volume? This is the big candles, okay, which is it. You can see that tells you that there is a lot of buyers who taking control here. It's coming to hit you or close here, and this is what, if you are a scalper, you need. You want to see these big candles. That shows you that there is buy sell pressure here. So you take it quickly, you make your money and out. The market doesn't belong to your grandfather. We are all in to make money. So this shows you there's a lot of sell pressure. So you can see the buy pressure, big candles. So as I told you, is going to hit here, and straight away probably is going to retrace them. Before, if there is more buy pressure, the next candle probably might come down and retest the structure. And if the structure doesn't break, I'm going to take a buy and bring it all the way up here or here. So, and you can see, so the consolidations, the small candles, because when the market is consolidating, people have taken their profit. So the demand area or the supply area, price is going setting up, and is setting up to go down or up. So the breakout is what I was explaining here. So if you're watching here also, you have this long downtrend here. Okay, using these candles, you have your key area here. Okay, you have another key area down here, so you can have your box there. Okay, and what you are looking for, a breakout, a break above this, a break above this, a break above the box, and the next key area is here. Then there, then there. I'm not a magician. I practice every day. So if you practice every day, you'll be able to do it. What we talk about, the price is going to hit here and is going to retrace. And exactly that is what has happened. And if you keep practicing and practicing, this is what you know. So this is a key area here. If the market comes, price comes back here and retests here and cannot break, because remember, it broke a key area here as well. So I want it to break this key area, which means that structure is broken, retest this area, fails to retest, then boom, you can take a buy and scalp quick. Ow. Thank you very much, and I look forward to hearing your feedbacks and questions. Bye bye.